we're having this weird dynamic in the auto market where there's surging demand for used cars. There's a chip shortage affecting supply of new cars. Interest rates are unusually low, but it's unclear what mobility is going to look like over the next 12 months. What impact is this going to have on this industry that's already going through this electric vehicle transformation?
Well, John, what you're going to see, obviously, even before these latest chip shortages, the inventories in the industry was significantly below what's deemed optimal levels. Probably the industry was about 500,000 units below here in the U.S. of the optimal inventory level. So the net effect is, from a consumer standpoint, there's going to be less choice on the lots because the production just won't be there to the extent that the automakers had planned. Prices will be higher because the automakers will pursue margin, right? So they'll reduce incentives. So prices to the end consumers will be higher. And then from the automotive manufacturer standpoint, listen, this is a bit like triage. They're prioritizing their high margin products like their trucks and their SUVs and their crossovers. And they're going to drive for as much margin as they can for the production that they do have. So it's just another challenge for the auto industry. But, this is an industry that always faces challenges and always has a way to get through it.
And Mark, in a way, we see this play out almost every year with Apple. When they launch an iPhone, there's usually a shortage of units, and you end up getting more of the higher-end iPhones with more storage available. It's like, oops, we got a shortage, but you can get this model with, half a terabyte of storage on it. Yes, you'll have to pay a couple $100 more, but that's what we've got in stock. Does this, in a way, play into the hands, then, of the automakers who have higher-end cars? The Teslas, for example, the cars that are more outfitted with electronics because they can get margin there. They will make the chips that they have, they'll build into those models. And, if somebody wants a low-end car, they can get it used.
Yeah, John, you're exactly right. What's going to happen is literally through every automaker, whether they're selling mid-size priced vehicles all the way to the luxury end, they're going to push what they call mix in the industry, which is outfitting the cars with the latest options that drive margin and profitability. And so when you look at the earnings from the automakers going forward, volume will be down versus what they had projected, and that's why they're being very cautious with their production outlooks. But their average selling prices and what's called the mix that they have is going to go up significantly because they're going to push for that every last dollar. I mean, you have a situation in the auto industry, in many industries, you've heard the term software is eating the world. Look at it this way. Semiconductors are literally the forks and knives that allow you to eat that software, and the software content in vehicles is continuing to go up. It's driving chip demand. The manufacturers don't have a lot of commercial pull with the foundries or the semiconductor chip makers because it's a relatively small part of their business. So that's why they're getting governments involved to try and help with folks like TMSE, who are the large foundries, because, when production goes down, that impacts the entire economy of where that production is located.
Mark, certainly such a ripple effect of that decline in availability of these chips. But my question is, what is the impact going to be on the electric vehicle plans, on these EV plans that these automakers have? Is it going to delay the timeline that they've laid out? What happens there?
Well, that's a great point you mentioned because it's a really strategic issue for the automakers. When you look at electric vehicles, the semiconductor content in those vehicles is much higher than an internal combustion engine. And so when you look at the automakers, as we mentioned earlier, they're going to be pushing for the most margin they can get on every unit of production that they have. At the same time, folks like GM, which have announced a number of electric products coming to the market this year, they're going to have to make the choice because right now, on a fully accounted basis, those products either don't make money or make much less money than some of their bigger internal combustion, trucks and SUVs. So they're going to have to make the strategic decision. Do they go for a little less profit to make those introductions on time and move them and the industry and consumers towards electrified vehicles? Or are they going to delay those launches, maximize profitability, and when the chip shortage resolves itself, then introduce those? So My bet is most manufacturers will go ahead and introduce their electric vehicles because that is the future, and many of them want to get that first step out there before others.
Shepard Smith here. Thanks for watching CNBC on YouTube.